This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping on July the 14th, 2016. Our time is 8:44 Mountain. A radio show runs on 6:30 CHED, Sunday afternoon at 3 o'clock. If you ever miss a show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. We're also on TuneIn, and we have our very own YouTube page. You can listen to the radio show there, as some do. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. We have an outstanding free weekly newsletter that we send out. If you would like to get your name on the list, you can go through it in minutes or spend hours if you want. We'll send it out to you. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. Featured Diamond of the Week, and this is a must-see. A .62 carat shield cut, fancy, vivid, yellow, internally flawless. If you have never seen a shield cut before, this is the diamond to take a look at. Go to rarecoloreddiamonds.com, featured Diamond of the Week. And as we start today's program, it was interesting to note this morning that in Britain, even though they had a lot of tumult with the Brexit, new prime minister and new cabinet, now they start the negotiating process. The pound, obviously up and down, stock markets very volatile. They chose to keep the British interest rates at 0.5%. Now in Canada, the Bank of Canada, they left interest rates at 0.5% as well during the week. And it's interesting to note, Macquarie says the Bank of Canada won't raise rates until the second quarter of 2019. Can you imagine that? They will be on the sidelines, the Bank of Canada, according to Macquarie, 2019. And obviously, that's why we're saying, look at some of the alternatives that Harold has to offer when it comes to making money, because in this environment, you're not going to be able to retire or make any money in guaranteed investment certificates or in bonds. And we'll talk more about bonds. In fact, something happened in Holland, first time in 499 years. We'll talk about that after Harold gives us his commentary. But Harold, we are in unprecedented times. And if those people that are listening to our radio program have not spoken to you yet, they should, because it looks like low interest rates, negative interest rates are going to be around for a long, long time. And if you're looking to make money, you're the person who's got a program for them.
You bet, Randy. It's unbelievable the times that we're in. The markets are so volatile. But as predicted, the U.S. stock market is extremely strong. It's up another 153 points at 18,525. So we anticipated that this was going to happen, that the U.S. dollar was going to stay strong, just taking into consideration everything that's happening around the world. Now, gold prices have remained fairly strong, even though they're down about $20 this morning. The fact is that there's so much trouble around the world that the gold market and the silver market are at the high ends of their range. But again, my feeling on it short-term hasn't changed. I do believe that the U.S. dollar is going to be the strongest currency, and that is going to push the price of gold lower temporarily. Again, I'm very impressed with what we've seen. We've seen about a 35% increase in the price of gold since the beginning of the year, which is substantial. But the fact is that what's still looming is those short positions held by the banks, and that tells me, along with a strong American dollar, that we're probably going to see gold back off, back down to around $1,050 to $1,100, and that could happen at any time. Again, there's so much volatility in the markets, and the reason the gold and silver are higher at this point is because so much turmoil is going on around the world. But again, when everything is said and done, if it doesn't affect the U.S. economy, the market is not going to go down. So the fact is that no matter how bad things look for England, and over the longer term, the reason that England did this, or Britain did this, is because they feel they're going to be better off. And this whole scenario is going to be over in a couple of years. It's going to take that long to straighten out everything. So the fact is that with interest rates low all around the world, and as Randy has just mentioned, in Canada it's down to 0.5% and not going to raise interest rates in Canada for another couple of years. That tells me that the Canadian dollar is going to remain weak. And if the Canadian dollar remains weak, again, it's going to affect any traveler, any purchases outside of Canada for Canadians, because, again, the Canadian dollar could literally fall back down to around the 70-cent level or possibly even lower. So what I see at this particular point is that gold is holding resistance right now at about 1325. Again, over the short term, I do believe that we are going to see an interest rate hike sometime this year in the United States, and if we get that or maybe two of them, that would push the U.S. dollar above par, and again, it would set gold down to the levels that I anticipate that it will. But again, this is just a short-term situation. Over the longer term, even the intermediate term, we do anticipate gold is going to head back into a bull market. And that being said, the last bull market that ended in 2011 brought gold all the way from $250 all the way up to $1,920. Then we know what happened. You know, it's literally impossible for a bull market in gold like we had for all those years from 2000 all the way up to 2011. We had an 11-year bull market in gold, and it hit 1920. It was definitely going to $2,000. Everybody was bullish on gold, and the government did not want to see gold continue to move higher because it signals that there was no recovery happening in the United States. As foolish as that may sound to you and I, the fact is that in the U.S., with everything that they did after 2008, 2009, you know, to get the stock market back on track and the banks back on track and certain companies that were on the verge of bankruptcy back on track, they didn't want gold to reflect that the opposite was happening. So what they did is they manipulated the price, and they did so by raising the marginal requirements in the futures market 5 days in a row. They made it so expensive to trade gold and silver that gold fell from $1,920 all the way down to 11 and change. They made that happen. That's what's so criminal about that whole scenario. So what they did is they turned a massive bull market in gold that was going to $2,000, $2,500, and they turned it into a negative market by making it so expensive that most speculators could not trade that market. And that's where we're sitting in this range for the last 3 years now. Do we believe that gold could take off? Of course we do. We just saw it happen. It went from 1,050 at the beginning of the year all the way up to 1,350. Now, there's very heavy support or resistance, in gold at 1,380. We've seen the market come close to that, but it keeps backing off. That's a very important number. Again, I'm looking at the Commitment of Traders report that tells me that short term, we have the largest short position in gold and in silver that we have ever seen, and that's held by the commercial banks. That tells me, and I've seen this happen many times over the last 15, 16 years, that gold is going to head lower just for the short term. So for the aggressive traders that trade the futures market based on what our recommendations are, again, gold at this level I believe is a good short. But I'm not a trader of gold. What we're looking for is buying and holding, because we believe ultimately with the state of the world economy and what's happening with interest rates and everything, we believe that gold over the longer term will be a $3,000, $4,000, possibly $5,000 metal. Right now, it's trading at $1,325. Again, if I'm right, the market goes back to around $1,050, $1,100. It would be a tremendous buy at that particular point. The problems in Europe are not going to go away. The thing is that if you compare what's happening in the in the U.S. economy, which is not in great shape, there's no doubt that the U.S. economy has got its problems, but it's in much better shape than the European economies. So at this particular point, again, we're going to stick with our recommendations of lower gold and silver prices over the short term. We think that the U.S. dollar is going to strengthen. That's going to, again, bring pressure on the price of gold, and I'll certainly let you know when we feel that that is an opportunity for you to buy. We're very optimistic on the future on the recommendations that we're making, but again, you've got short, intermediate, and long-term situations, and right now we're caught in a short-termer. Basically, at this point, Randy, again, there's so much problems in Europe, but they're not affecting the U.S. market at this particular point. That's why the Dow has actually made about a 600-point move in the past couple weeks, even in spite of what's happening in Europe. So, as Randy mentioned at the beginning of the show, it's nearly impossible to make money today. To put your money in the bank, you're getting 0.5%. Take into consideration inflation and any taxes you're going to pay on that profit, you're going to end up losing money. Anybody who's in the stock market knows, and mutual fund markets knows, that that's a very risky market. 90% lose their money, and now is not the time to be in that market in any way, shape, or form. And the thing that concerns me, Randy, is that there's very few investments out there that can give any type of return whatsoever. If you're looking to retire, you're not going to retire on your retirement savings plans. Again, in most cases, they haven't made money in a decade in Canada. As it happens, being Canadian myself, my clients are mostly Canadians. We've worked together for the past 30 years that I've been in business, and we have programs for our Canadian clients only that pay approximately 25% a year. I know it sounds like a ridiculous number, and it sounds too good to be true. But the fact is that it's a partnership, it's a private investment, and again, my clients that have been invested in these markets with us for the past 3 or 4 years have done tremendously well. If you'd like to know about those, just contact us. I'll explain exactly how our private investment programs work, and if it's for you, again, we would love to have you as a partner. So give us a call. We'll explain how our alternative asset markets work. We're not in stocks. We're not in paper, gold, or silver. We're only in physicals, and we trade in different alternative assets that and most companies don't even know how to trade them. So we all have our form of expertise, and this happens to be mine. We're dealing in the rough diamond market, and it's been sensational for our Canadian clients. So again, if you're interested in above-average returns, give me a call. I'll explain how our programs work, and we'd love to have you as a partner in some of the projects that we're working on at this particular time.
Speak with Harold, personally, privately, 1-800-432-1022. The call is free. Anything discussed, 100% confidential. 1-800-432-1022. And Harold has always been very generous with his time. If you listen to the radio program and would like to speak with him and ask him any questions whatsoever about investing, any questions about your personal situation when it comes to investing, he'll be happy to take your call. 1-800-432-1022. RareColoredDiamonds.com is the website. RareColoredDiamonds.com is the website. Our featured diamond of the week is a 0.62 carat shield cut. And if you have never seen a shield cut before, go take a look at featured diamond of the week, RareColoredDiamonds.com. RareColoredDiamonds.com, featured diamond of the week. It's a 0.62 carat shield cut, fancy, vivid, yellow, internally flawless. It's a one-of-a-kind. We'll talk more about diamonds coming up in the second half of the show. Well, Harold was touching on it, and obviously in the world today, we're seeing all sorts of different things happen with monetary policy, cashless society being pushed by some segments of the world, and also negative interest rates all around the world. Negative interest rates are one of the greatest scams in the history of mankind. Financial repression, pure and simple. At the end of May, the total amount of government debt with negative yields had reached $10.4 trillion. By July 27th, it had jumped to $11.7 trillion, according to Fitch Ratings. Since then, even more debt has skidded into negative yield absurdity, now exceeding $12 trillion and moving much higher. Merrill Lynch now says 29% of the global fixed income market is sporting negative yields, up from 24% pre-Brexit. That according to Christina Hughes, chief investment strategist at Otterwood Capital. It's a continued march south in global yields, courtesy of the relentless demand for bonds. So over $12 trillion in investor money is stuck in negative yield absurdity, an amazing feat in central banking to convince so many people, so many investors, particularly the smart money, that this is somehow good for them, that paying money for the privilege of lending money to the government, no matter how decrepit its financial situation, even to Japan, is the hot thing to do. Many big institutional investors have to buy government bonds, such as insurance companies and pension funds, no matter what the yield. So there will always be a forced buyer for these instruments. Now, we did touch on it off the top of the show, promised we would tell you. This is just mind-boggling to me. This happened for the first time in 499 years. Dutch bonds have done something that we have not seen in 499 years. Their 10-year bond dropped below into the negative territory, the negative yield club, for the first time in 500 years. That's right. It's just literally unbelievable to think. And this is interesting to note that the Dutch bonds are the lowest the country has ever seen. Amazingly, there are nearly a millennium of recorded transcripts to compare against, as record-keeping began in 1517. As a historical reference point, that's the same year that Luther published his 95 Theses. But just imagine, 499 years, we see an event. Yes, we are in unprecedented times, but we take it even further. Something crazy is happening in Switzerland, and it's a sad sign for the world economy. Last week, yields on all, that's right, all of its government bonds out to 50 years have turned negative. Investors are now expected to pay for the privilege of lending money to the Swiss for a half a century at a time. It's just unbelievable. Other countries are getting nearly as good deals. 15-year German and Japanese bonds have also drifted below zero. Even economically wounded Spain can borrow for a few years at a time and theoretically make a profit. It's like a bad financial world play on the Yakov-Smirnov joke. In Switzerland, lender pay you. Why are investors settling for these kind of terms? And you can read that article in our free weekly newsletter. I really encourage you to get our newsletter. Lots of good information on negative yields. 1-800-432-1022. 1-800-432-1022. Speak personally and privately with Harold about investing. You don't have to be in a position where you're not making any money. He has different programs in place where you can start making money today. The website is rarecoloreddiamonds.com. But Harold, isn't that stunning? 499 years, and they have the records to back it up in Holland, that they have a negative yield on their 10-year bond. All of the government bonds in Switzerland, up to 50 years. Who would give a government their money for 50 years and not get a return? It's literally unbelievable to think that we are having this conversation, because you would think the smart money would not be putting its capital in the hands of negative yields and governments based on what's happening around the world. It's just really unprecedented, Harold, and people don't have to accept that.
No, they don't, but I just find it impossible to believe that somebody would actually do that, that any investor would put their money into a bond and get a negative rate. It makes absolutely no sense. So the only ones that could really be investing in this is the government itself, and they've got to be buying back their own bonds, because nobody in their right mind would make an investment knowing that they're going to lose money on it, especially something that's supposed to be as safe as a bond and something that's so long-term. So, again, these are times that most people could never, ever understand, and there's none of us, nobody that would listen to our radio show that would ever invest in anything with a negative rate of return. They're not going to put their money into the bank and have to pay the bank in order to keep their money for them. I just would never do that. You keep enough money in the bank to pay your bills, and that's it. You'd have to put your money elsewhere. And as far as making an investment in a bond that you're going to wait that long for and then get less money than you put in, there's no there's no human on earth that would do something like that. It has to be the government that is buying back their own bonds, because it's absolutely ludicrous to think that anybody in their right mind would make an investment like that. But again, it's just a sign of the times. And soon, because the banks have never, ever recovered from 2008 and 2009, they're still holding all that debt from the mortgages and everything. The fact is that most of the banking transactions are bank to bank. Most people don't even deal with the banks anymore because they're so difficult to deal with. And again, they don't want to necessarily loan money out at 0.5% or 1%. So again, they tend to do it between banks. The situation is dire. Most people have no clue how bad most investments are out there and how little of an opportunity we have to make money. Again, we have programs that pay very high returns for our Canadian clients only, people that have listened to our show, for the last 15 years. These are our lifeblood. These are our friends and clients. And again, I know that I could make more money keeping these investments for ourselves, but that's not how we built our business over the years. And the reason my company is built to the level that it has is because of my clients and friends in Canada. So again, give us a call. We have alternative assets that pay way more than what the mainstream is paying. And again, just give us a call. We'll explain how those programs go.
Speak with Harold, 1-800-432-1022, 1-800-432-1022. Take a look at our featured diamond of the week, rarecolorediamonds.com, featured diamond, 0.62 carat, shield cut, fancy vivid yellow, internally flawless. It is absolutely gorgeous. Harold touched on this on the last program. Of course, we had Wimbledon. Serena Williams' prize was worth $380,000 less after Brexit. Serena Williams, among those who have lost money in the wake of last month's Brexit vote, beat Angela Kerber in Saturday's Wimbledon final, her 22nd major title, tied with Steffi Graf. The winner's prize is worth $2.59 million when converted to U.S. dollars, about $380,000 less than it was worth a few days before the tournament on the eve of the UK's vote to leave the European Union. Now, they go on to add that the men and women's Wimbledon championship this year will receive a record prize of about £2 million. On July 23rd, 4 days before the tournament began, that was worth $2.97 million. Since the vote, the pound has plummeted to its lowest level against the dollar in 30 years. It's come back here a little bit in the last week or so. Williams actually took home more dollars for last year's Wimbledon title, $2.92 million, than she will earn this year. And we know that they have the British Open underway this week, and I would imagine that that will be the same case for the winner of the British Open. If they're being paid in pounds, then you're going to find a scenario where more than likely they'll be making less money than they have in the past due to the British pound being so volatile because of the Brexit vote. Connect with Harold. Find out more about currencies, hard assets, investing. 1-800-432-1022, 1-800-432-1022. Connect with Harold at rarecolorediamonds.com. We'll come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on July the 14th, 2016. Our time is 9:11 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. Miss a show? We have a podcast through iTunes. Type in The World Financial Report on Radio. We go anywhere your portable device does when we're podcasting as well. We're on TuneIn, and we have our very own page on YouTube. You can listen to the show there. And I should mention Harold's two websites, HESradio.com, rarecolorediamonds.com. The shows are streaming archived 24/7 for you at your convenience. Featured Diamond of the Week from rarecolorediamonds.com. This is a one-of-a-kind. This is something you will rarely see in your life, and that is a 0.62 carat shield cut, fancy vivid, yellow, internally flawless. It is a stunningly beautiful diamond. And the shield cut, for them to take the time to do it and all the hours and thought that must have gone into it, literally awestruck looking at it. You can take a look at it. Go to Featured Diamond of the Week. Featured Diamond of the Week, rarecoloreddiamonds.com, and take a look at that shield cut. It is so rare. And Harold, it's one of those things that you don't see very often. And when you get a chance, people should, because it's like going to a museum online, your website, all the greatest fancy colored diamonds, rare colored diamonds, and this one is one of the best that you have.
You bet. It's very rare. You'll never see another diamond like it, actually. It's in the shape of Superman's shield, believe it or not, and it's vivid in color, which is the highest saturation of color for yellow diamond, and it's internally flawless, so it's really a one-of-a-kind. It's spectacular, would look amazing in a pendant. But a diamond like that will continue to go up in value by about 15 to 20% a year. It's extremely rare. Again, the cut on it is spectacular. You'll never see another diamond like it. And color-wise, it's a 9 out of 10. The color on it is extremely strong. So, again, very proud to bring that as a featured diamond. And it's a great diamond to get started at as far as collecting. And a lot of our clients are collecting colored diamonds and trying to get diamonds in almost every color. The fact is that reds are the rarest of all diamonds, then come blues and pinks and greens and oranges. And the fact is that with the world economy as poor as it is and as frightening as it is, with 0% interest rates or 0.5% interest rates and negative returns on bonds and bank accounts type of thing, these are the type of assets that you should be looking at for the long-term investment, because they never go down in value. And when you go into an investment, the first and foremost is protection of your capital, of your initial investment. You never want to lose, unless you're in full speculation mode, you never want to lose the money that you put up. So the fact is, when I look at an investment, I look to see how safe that is, what the returns are going to be, and first and foremost is capital preservation, making certain that you invest in an asset that's not going to drop in value. And that's what this asset will do for you. It's a one-of-a-kind. You'll never see another fancy, vivid, yellow, internally flawless shield-cut diamond. So a diamond like that will continue to go up in value. What you need to do is put that diamond away for 10 or 20 years. If you don't need it yourself, it's much better than buying stocks, giving it to your kids and grandkids for their future. Because a diamond like this will never, ever decline in value, and over time will increase substantially. So it's better than stocks, it's better than bonds, it's better than putting your money into almost any investment. Again, to put a diamond like this aside, or an Argyle pink, or a yellow flawless, or a blue, or whatever, is a much, much stronger investment than almost any other investment that you can make out there. Randy, this is by far one of my favorite diamonds. It's a one-of-a-kind, and when you see it in person, it's like nothing you've ever seen before.
We really encourage people to go take a look at it, rarecoloreddiamonds.com, rarecoloreddiamonds.com, and feel free to look around. There's a video on there you can watch. Harold has recently redone the website, and it's very friendly for those that are online via iPads or iPhones, but you can obviously view it with your iMac or your PC computer. It looks spectacular. It's very well done, this updated website. Go to rarecoloreddiamonds.com, rarecoloreddiamonds.com, featured Diamond of the Week. Get our free weekly newsletter, because this week we have a story from rough diamond to finished jewelry, how Graf cut the 299-carat rough, fancy, intense yellow diamond into the 132-carat golden Empress diamond. We have that story with pictures and with commentary, and I would really encourage you to take the time, get our free weekly newsletter from Harold, rarecoloreddiamonds.com, or you can connect with him at 1-800-432-1022. That is a must-read article. And Harold, now is the time, I think, for people, as we were saying off the top of the show, here you have, in Holland, the Dutch, negative interest rates for the first time in 499 years. And for those that have never thought about investing in hard assets like gold, silver, or diamonds, this, in my mind, is saying to the average everyday investor, I need to look in ways that I never have before when we have unprecedented events, 499-year type events happening. You really have to change your mindset because the stock market has incredible risk. The bond market is at a point where you're making no money, negative yields, or as Harold was saying, even if you're getting a bit of a yield, if you factor in inflation and taxes, if you do pay tax, in most cases, if you just factor in inflation, you're not making any money. That's why it's so important to take the time and speak with Harold personally and privately at 1-800-432-1022. The call is free, and obviously anything discussed is confidential. Harold, I know that you have an open invitation to anyone who listens to our radio program to sit down with you over the phone, and if they have any questions, you'll be more than happy to run them through the different programs that you have and some of the different alternative assets that you're recommending, so people aren't sitting in a scenario where they're not making any money for years and years on end, because let's face it, if that is the case, it's going to be very, very hard to retire if you're not making any money.
You better believe it, and that's the case for pretty well everybody at this particular point. I mean, it's almost impossible, unless you have a huge amount of money put away that you're going to be able to draw off of. Most people, when they're going to retire, number one, they own their home. Hopefully the mortgage is paid off at that point. And again, if they don't have enough money, it means that you're going to have to reduce your lifestyle. You're going to have to learn to live on a fixed amount of money. And basically, in most cases, people are living much longer and outliving their money. So the fact is that the way we are right now with interest rates below 1%, with the stock market so risky that you're pretty well assured of losing your money if you put money into that market, where is somebody going to turn as far as making any type of return on your money whatsoever? Again, we have programs because we're in the alternative asset business. We deal in diamonds, we deal in physical gold, we deal in programs where our clients partner up with us and invest in some rough diamond parcels of diamonds that are just coming out of the mine. So again, our clients are used to making larger returns than the norm. And again, in today's marketplace, it's nearly impossible to make a return. Therefore, if you're not making any return on investment, you're never going to be able to retire in a comfortable way. And that, to me, is the biggest shame of it. You know, we work so hard throughout an entire life, and then at that point when we're finally able to retire, there's no money left. You're going to have to live on early bird specials and eating at 4:35. Who wants to do that? That's not the way that life is supposed to be. When you work hard and you do the right thing and you've invested for the future, you know, hopefully it's going to work out. But at this particular point, everybody that I speak to is going to have a very, very difficult time if they're just going to deal with basically the interest rates that you're getting in the bank. And again, if you're not in the stock market, which I'm professing not to do, again, if you are, you're going to more than likely lose your money. We have alternative asset programs that pay much more, but you'd be partners with us. It's not that you're just, you know, making an investment type of thing. In most cases, you'll be partners with us on deals that we're doing. So if that's of interest to you, our clients are making over 25% a year or more on our investments, and if that's something that would be of interest, please give us a call.
Connect with Harold, rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. And if you've never gone to Harold's website, this is the week to do it, because you're going to see a diamond that is so rare because of the cut. It's a .62 carat shield cut. And as Harold was saying, it's done in the shape of Superman's shield. Shield cut, fancy, vivid, yellow, internally flawless. See it at rarecoloreddiamonds.com, rarecoloreddiamonds.com. Off the top of the show, we talked about how in Britain they did not raise interest rates. Actually, they were expected maybe even to lower interest rates. Because of the Brexit, they didn't. They left interest rates at a 0.5%. The same was the case earlier in the week here in Canada, where the Bank of Canada decided to leave interest rates where they were. There was a speculation that they may lower interest rates. We had that story off the top of the show about Macquarie coming out saying the Bank of Canada won't raise rates until the second quarter of 2019. And this all factors into what does a person do when it comes to investing money for retirement and their personal savings. If interest rates are going to stay very, very low for much longer than expected, how do we survive? An interesting story this week, you can find it in our free weekly newsletter. Some pensioners worry about the risks. Pension groups say regulators need to be changing to protect workers' retirements. Years of low interest rates are putting pressure on Canadian pension funds and highlight the need for tougher regulations. Say a pension advocacy group. When interest rates are low, the contributions that have to be made to the pension plan to keep it running tend to be on the high side. And the lower the interest rate, the higher the cost. In addition to higher costs, and this is Bob Farmer of the Canadian Federation of Pensioners, says the sustained period of low rates has made it difficult for defined benefit pension funds to rely on normally reliable sources of income such as bonds. Farmer says this is a potential problem because many defined benefit plans are underfunded. The chickens come home to roost if the pension plan gets into trouble because the employer gets into trouble, Farmer said. And then it's quite possible that the employer goes bankrupt and the employee's pension will be reduced. And that's something that we've seen in the United States after the financial crisis in 2008 and 2007. You saw pensions being cut by many different companies. Earlier in the year, we had that story about a trucker's pension in the United States, where they were going to be cutting the amount of money that truckers were getting by 50%. And if you were relying on that money, you were going to be in a position, as one of the truckers was, as looking for work in his 70s to make up the money that he was going to be losing. Now, the U.S. government stepped in and said, well, wait a minute, you're not going to cut the pension by 50%, even though if they didn't, the entire pension plan was going to become insolvent in a very quick manner. And that is still yet to be decided. But you can see, Harold, the scenarios that people run into. If you do have a company pension, I would really advocate having money on your own saved through different saving programs, such as the ones that you have, to obviously give you that safety net in case something does happen with your government or your work pension, because having money on your own is definitely a good idea to protect yourself, as we're seeing with the concerns here in Canada and what's happening in the United States.
You bet, Randy. Again, you've got to be in control of your own situations, your own financial situations especially. Again, if you're going to leave it into somebody's hands, the fact is that more than likely you're not going to be happy with the results. Right now, there's very, very few areas in which you can make money. So the fact is that you have to look alternatively. If you look at the standard investments in stocks, bonds, and real estate, those are all areas that are extremely difficult to make any money at this point. So again, changing times means that you've got to change the way that you think. And you've got to look at all of the options available to you and make an intelligent business decision. That's why we do the radio show. That's why we send out the newsletter. That's why all this information to you is free and at your hands. If you need further clarification, you can pick up the phone and call me anytime. Randy and I have been here for you for over 16 years now. We are here at the beginning of the bull market when nobody in the world believed in our recommendations. It turned out to be the biggest bull market of all times, and we have clients that have made literal fortunes in trading some of the markets that we've recommended. Now, as far as making recommendations, I make recommendations on some of the most volatile and risky markets in the world. However, we don't leverage our positions. What we do, when I recommend gold, I recommend buying and holding for the longer term. The clients that followed our advice back in 2000 and bought gold at $250 realized 11 years later that they had the biggest bull market of all time when gold prices went to to 1900. That was one of the biggest returns on investment of any market in history. And that will happen again. Now, the markets are volatile, and you have to wait for the right time. You don't want to be buying gold right now at these extremely higher levels. I know you think that you're missing something by watching gold going higher and higher, but the fact is there are other factors in the market that will negate the bullishness of the market short term and bring this market down. And that, at this point, is the commitment of traders' report, where the major banks are short record amounts of gold at this time. According to what I'm seeing, the U.S. dollar will be the strongest currency, and there's a direct correlation between gold and the U.S. dollar. The stronger the U.S. dollar gets, the weaker gold gets. And that's what the short-term scenario is going to be. Now, I do anticipate that the price of the U.S. dollar is going to remain strong. I'm also predicting that if the Bank of Canada has come out and said that they're not going to raise interest rates, they're going to keep interest rates at 0.5% or lower for the next few years, that tells me that they have no interest whatsoever in strengthening the U.S. dollar. That means, and it's extremely obvious, the Canadian dollar, is that you need to be in U.S. dollar-based investments. It's actually as clear as the nose on our face. The Canadian government is telling us that they're not going to raise interest rates. That means that the Canadian dollar will remain cheap. The U.S. dollar, on the other hand, is moving substantially higher. And when the Federal Reserve does raise interest rates here in the States, the U.S. dollar is going to take off. So what I've been saying to my clients is get out of Canadian dollar-based investments and get into U.S. dollar-based investments. My clients are not only making much more returns than anybody else, but they're getting paid in American dollars, which adds about 30% right now to the bottom line. And soon, I believe that'll be 40 to 50% more. So you have plenty of time to get in with us, plenty of time to make money in U.S. dollars, and even though the conversion may hurt you at the beginning, it's going to be a huge profit center by the time we're through. So again, give me a call. I'll explain everything that's going on in the world to you today, what your options are, and why my clients are doing much better than the mainstream, because we allow our clients to partner up with us on private investments that are turning out to be extremely strong. So again, Randy, that's the way I see things at this point. With interest rates as low as they are and soon to be negative, you need to make a move at this point if you're going to make the type of returns that are going to help you moving forward.
And now is a very good time to look at it because, and we have this story in our newsletter, December rate hike by the Fed after raising interest rates at the end of 2015 for the first time since 2006. The Fed, the central bank, has repeatedly postponed plans for a second rate hike, although they did tell us at the beginning of the year, back actually when they raised rates, that they would raise rates 4 times this year. They haven't done it once. And now it doesn't look like a move until maybe December, according to J.P. Morgan. One reason for the Fed hesitation, the risk that weakening corporate earnings will prompt businesses to rein in investment and hiring, and they expect maybe a slowing overall economy and slowing growth. Now, the next 12 months will be very, very interesting to see what happens. And obviously with the Brexit as well, as they start negotiating over in Britain, their exit from the EU. But one would expect, as we did have a very strong jobs number last Friday out of the United States, they are going to look very hard as raising interest rates. If Canada does not raise rates, which we're not going to because of the state of our economy, the U.S. dollar will appreciate, the Canadian dollar will go down. So if you're waiting, now is the time to transfer your Canadian dollars into U.S. dollars before the Canadian dollar does go down any further. Speak with Harold about that. 1-800-432-1022, 1-800-432-1022. RareColoredDiamonds.com is the website. Featured diamond of the week from RareColoredDiamonds.com is a .62 carat shield cut, fancy, vivid, yellow, internally flawless. If you have never gone to Harold's website, now is the time to do it and take a look at this rare, one-of-a-kind diamond. It was Harold Siegel that brought us the diamond market. And it was, here we are, taping the show on July 14th, so we're approximately 2 weeks away from the beginning of August, if you can believe it. But it was August of 2005. Harold wrote an article, and you can still find it on his website, HES Radio.com, also rarecoloreddiamonds.com. Naturally fancy colored diamonds, the best kept secret. And that was 11 years ago. Harold was the first one to bring this to our attention. He started his website, rarecoloreddiamonds.com. A lot of people thought that investing in diamonds was a very interesting idea. We'll say that in a very kind way. And having a website that obviously featured diamonds as an investment, very interesting. And it's amazing to me, Harold, how over that 11-year period, you have been proven correct time and time again that yes, in the environment that we're in, we've seen naturally fancy colored diamonds, rare colored diamonds, go for record price at auction. It's even gone beyond our wildest dreams when we see a big blue diamond selling this year for $58 million. We hear stories like the Shirley Temple diamond that was purchased for $7,200 by her father in 1940 for her birthday, selling privately for millions and millions of dollars. And I'm trying to remember what that total was, around 30 million, somewhere in there. It's the extent of the success of colored diamonds has been beyond anyone's expectation, and Harold was the first one to bring it to us and bring to us the idea that investing diamonds was going to be a way to make money in the economic times that we're currently in, which are unprecedented, as we pointed out earlier in the show, with Dutch bonds going negative for the first time in 499 years. And Harold, I give you credit. And that's why when we have a featured diamond like we do today, that .62 carat shield cut, fancy, vivid yellow, internally flawless, for those that do not know anything about investing in diamonds, hard assets, private deals, now's the time to speak with you personally and privately. 1-800-432-1022, because it looks like low interest rates are here for a long time. And for us to get where we want to go financially, we're going to have to change our mindset and move into areas that we've never been in before.
You bet. Again, you've got to keep an open mind, and you've got to be open to new opportunities and suggestions if you're going to survive in today's world. Again, there's no way in the world that we're going to survive with making no interest and no returns on investment. Most people depend on that, and in fact, a lot of the elderly depend on dividends from investments that they made to get by. And the fact is that the risk of being in the stock market today is so severe that there's no way in the world that the senior citizen should be in that market anyway. So what's somebody to do? We have programs that are very conservative that pay much higher than the mainstream. And again, a lot of our clients are seniors that if it wasn't for these programs would not be getting by today. So again, we've made these recommendations a long time ago. Get out of Canadian dollar-based investments and get into U.S. dollar-based investments. And many of our clients that have done that, many of our clients have retired because of it. There's still plenty of time to get involved. There's still plenty of room to make money in the currency markets with our programs. So again, give me a call. I'll explain it to you, and we'll get you on track to making your financial life a lot easier than it is right now.
Speak with Harold personally, privately. The call is free. Anything discussed, 100% confidential. 1-800-432-1022. 1-800-432-1022. RareColoredDiamonds.com is the website, and I would really encourage you to get our free weekly newsletter. Speak with Harold. Get your name on the list. It is a must-read, and you can go through it in a very short period of time, or you can spend hours. You can read it on any device. I've read it on my iPhone. I've read it on my iPad, my iMac. You can read it anywhere, and as I said, you can spend a few minutes and be completely up to date on what happened during the week, or delve further and spend hours if you choose. Get your name on the list. Speak with Harold. 1-800-432-1022. RareColoredDiamonds.com is the website. And Harold, thank you for another great show and your knowledge. And I would say now is the time for people to make a move, because if that U.S. dollar does go up further, people will regret that they didn't transfer Canadian into U.S. sooner.
You better believe it. And there's no doubt in my mind that the U.S. dollar is going stronger and the Canadian is going lower. So again, now is the time to do so. give us a call. It'd be our pleasure to help you out. I wish everybody a wonderful weekend and a very profitable day.
That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.